Okay, message. Hello, everyone, and welcome to the Africa session of the webinar series on regional insights to unlock financing and advance investment in plastic circularity in emerging economies. As most of us already know, about 90% of Africa's plastic waste is mismanaged due to inadequate collection and recycling infrastructure. And this has huge impact on the environment, health, and economy across the various countries. The multidimensional risks posed by this situation goes beyond continent, since plastic waste pollution does not recognize borders. The importance of unlocking financing and investment to advance plastic circularity in Africa, therefore, cannot be overemphasized, and will be the focus of our conversation for the next 75 minutes. My name is Claire Mugoji. I'm the Africa Regional Lead for the Global Plastic Action Partnership, and it is my pleasure to moderate this session. This webinar series is jointly hosted by the Circulate Initiative and the Global Plastic Action Partnership. The Circulate Initiative delivers cutting-edge research and builds high-impact programs and partnerships with a focus on addressing system-level barriers to the circular economy and driving collective action with corporations, investors, and policymakers. The Global Plastic Action Partnership, or GPAP for short, is a multi-stakeholder platform hosted at the World Economic Forum that aims to shape a more sustainable and inclusive world through the eradication of plastic pollution. The GPAP brings together policymakers, business leaders, and civil society to accelerate plastic action at the local, regional, and global levels. Our agenda today is structured into 4 segments. For the first 15 minutes after these opening remarks, we will listen to the key findings and overview of Africa case examples from a report titled Unlocking the Plastic Circular Economy, Case Studies on Investment. We will then have a 35-minute discussion by 4 distinguished panelists who will share their experience and insights on financing and investment in plastic circularity in Africa. In the 3rd segment, our panelists will have the opportunity to respond to a few questions and comments from the audience, and we will wrap up the session.
Hands on mute.
Sorry, Clem, we can't hear you at the moment.
Panelists, and lastly, use the chat box to share any comments you may have. Without much ado, I would like to introduce and invite our first speaker, Ms. Ellen Martin, who is Senior Advisor at the Circulate Initiative. She will be sharing with us the key findings from the case examples on plastic circularity financing and investments in Africa. Ellen, please.
Great. Thank you so much, Clem. It's a pleasure to be with you all today. We at the Circulate Initiative have had the opportunity to work closely with the World Economic Forum's Global Plastic Action Partnership over the past 3 years, focusing on this topic of how we finance the plastics circular economy through the publication of case studies on investment, as well as the series of webinars. Together, we aim to support better understanding and knowledge sharing about how to address the barriers to financing in this space, especially in emerging markets, and how we can increase investment where it's needed most. Our series of case studies, which were published in December of last year, illustrate more clearly how investment happens, to make it clear that plastic circularity is an investable sector, and that policies and the role of government have an undeniable influence on markets and investor perceptions of investability. With the evolution of the global dialogue around the Plastics Treaty, and with INC3 fast approaching, now is really the time for us to explore these themes further with a deep dive into investment activities in Africa. Thanks for the slide. Just to share a little bit of the key learnings from our case studies. First of all, voluntary corporate action is really driving a lot of collective action towards a circular economy for plastics already. Brands and strategic investors in the plastics value chain play an important role in boosting demand, and their support for the ecosystem can spark further action to support the circular economy shift. This encourages mainstream financial institutions to enter the market and fund the scale of circular economy solutions. And we've seen this in a number of case examples that we've highlighted in this report. Innovative financing approaches are key to mobilizing capital. So it's not a typical mainstream financial discussion, as I think you'll hear today on the panel. Strategic financial approaches and instruments are crucial to unlocking capital flows towards circular economy solutions. The issuance of such instruments can help to highlight the importance of the transition to circular economy and attract investor interest. With that, more mainstream financial institutions may enter to support the circular economy push. Finally, governments can and are developing domestic capital markets to attract private investment. So government plays a central role in the development of domestic capital markets through instruments such as green bond issuances and loans, which in turn helps to reduce the risk of private investment. And such financial instruments then can also encourage circular economy solutions in emerging markets. And we have some great examples from Africa as well. Our case studies in Africa and the actions of today's panelists, as I think you all will see, really support these findings and show us how financing of plastic circularity can and is happening. Let me turn then to sharing a little bit more about a couple of the examples that you'll hear more about today. One is the expansion of Mr. Green Africa's inclusive recycling model in Kenya. MGA is a Kenya-based collector and processor of plastic waste, transforming material into feedstock for post-consumer recycling and manufacturing in this space, which is used for packaging in many fast-moving consumer goods. By utilizing an app-based solution, the company provides informal sector workers with a better, more consistent income that captures a greater share of collected plastics market value, while bringing traceability and transparency to the plastic waste value chain. In mid-2019, Mr. Green Africa closed a Series A equity round to finance the expansion of its processing capacity and the opening of additional plastic buyback locations. This capital raised came from two similarly aligned social impact focused funds, among others. Funding from the Global Innovation Fund, Lily is here on the call today, a UK-based nonprofit impact first investment firm, which invested through its Unilever-sponsored Advance Fund. Additional capital from DOB Equity, a Dutch evergreen fund investing in East Africa. GIF and DOB are also providing financing by way of a concessionary loan. So against this difficult funding landscape during COVID-19, alongside existing investors, DOB and others, GIF extended the bridge loan to MGA as a convertible note, enabling the company to prepare for then its Series B fundraising round to finance additional production capacity and the processing of plastic into food grade standard pellets. This diverse group of impact and plastic circularity minded entities that are supporting Mr. Green Africa's scale includes Dow, US-based material sciences company, and the Minderoo Foundation, which has actively engaged in creating better data and transparency around the plastic pollution issue. With the support of these investors, Mr. Green Africa has ambitious plans to enable additional 90,000 tons of plastic waste to be recovered and recycled into new packaging applications and others over the coming years, and expand its operations in Kenya and beyond on the continent. At scale, the investment is expected to create approximately 200 direct jobs and impact the lives of 5,000 waste pickers. Leveraging that ongoing emergence of EPR policies in markets such as Kenya and the commitment of FMCG manufacturers to increase recycled material use in their packaging, MGA plans to expand to other parts of the continent. And this move will necessitate additional financing, enabling more commercial investors who have previously shown interest in that company to facilitate its future growth. Moving on to our other case example to share. This one is a broader one, Sunref, and the learnings that we can take from the renewable energy sector and blended finance solutions in that space is critically important for us to understand how it can happen in plastic circularity as well. If examples of deal flow and track record in African-based plastic circularity solutions are still emerging, we have much to learn from these analogous sectors. The Sunref program, Sustainable Use of Natural Resources and Energy Finance, was created by the Agence Française de Développement, AFD, facilitating domestic commercial bank lending to renewable energy and energy efficiency companies and projects. Operational since 2006 and given renewed impetus by 2015's Paris Climate Agreement, SUNREF seeks to remove financial and technical obstacles that prevent financial institutions in emerging markets from extending credit for investments that further the transition to a green economy and support the SDGs. Operating globally with 80 partner banks in over 30 countries, this program has become tailored at the national level, providing a combination of loans, guarantees, grants, technical assistance to local partner banks and the companies and projects that subsequently receive financing. SUNREF Nigeria launched in 2018 with a relatively mature financial market and 2 partner banks keen to build their green product offerings. The program has comprised $70 million US equivalent long-term concessional credit facility provided by AFD, divided equally between Access Bank and United Bank for Africa. Technical assistance component has been supported by the Manufacturers Association of Nigeria to help identify, assess, and execute renewable energy and energy efficiency projects among their members. And an investment grant, which includes the provision that up to 10% of any loan meeting the program's eligibility criteria can be extended under the program and repaid as a success fee. The EU funded the TA and investment grant components with an over $10 million award. After 3 years, the SUNREF partners have successfully dispersed the majority of their capital under the credit facility. And AFD primarily attributes that solid performance to the enthusiasm of its partner banks for extending renewable energy and energy efficiency loans and the green economy focus of the Nigerian government and the central bank. There are important learnings from this type of activity, and I think we'll hear more about that today as well. The AFD noted the difficulties in finding sufficiently mature and bankable projects, a challenge partly attributable to potentially difficult, onerous loan collateral requirements, but addressing such regulatory matters forms part of the TFSC, or Transforming Financial Systems for Climate, which is AFD's follow-on program currently under development. SUNREF program demonstrates the potential for bilateral and local financial institutions to collaboratively secure financing for environmentally beneficial infrastructure, including plastic waste collection and recycling. This program, I think, provides a template for stimulating access to capital for SMEs and other actors in the downstream plastic recycling value chain, particularly in countries with developing or suboptimal waste management and recycling infrastructure. So these are just 2 examples. As the case studies illustrate, governments are driving public and private investment into plastic circularity, and I look forward to the panel today to hear more about how this is happening across the African continent. In the coming months and years, though, governments will have a unique responsibility and opportunity to further foster solutions in a few key ways. For sure, creating a cohesive ecosystem for plastic circularity, incentivizing investment, and reducing or sharing risk by developing domestic capital markets. I look forward to hearing from our panel today and turn it back to Clem as our moderator. Thanks so much.
Thank you very much, Ellen, for the very insightful overview on the report. Now, transitioning to our panel discussion, I'd like to welcome our 4 panelists and invite them to briefly introduce themselves and their organizations in just under 1 minute for each person. We have a gender-balanced panel, and we would like to start with the ladies. So first off, I'd like to call on Ms. Lily Steele from Global Innovation Fund to please introduce herself.
Thanks, Clem. So my name is Lily Steele. I'm an investment director at the Global Innovation Fund. As Ellen mentioned previously, we're an impact investor. Our mandate is to lift people out of poverty and invest in innovations that are simply doing some things better than they were been done before.
Thank you very much, Lily. Short and sweet. And then we go on to Ms. Haley Lowry, who is from Dow Chemicals. Haley?
Good morning, everyone. I'm Haley Lowry, or good evening and good afternoon. I'm Haley Lowry at Dow, and I lead sustainability for our packaging and specialty plastics business. We're a large material science company that's been around for 125 years and are very committed to circularity and renewable products. Nice to meet everyone.
Thanks, Lily. Now to the gentleman, Mr. Chidozie Ezike from United Bank for Africa.
Yeah, thank you very much, Clem. Chidozie Ezike, I'm the head of sustainability and ESG at UBA. So UBA is a financial institution with branches in more than 20 African countries, including the United States, UK, and Dubai. So as a commercial bank, essentially, we are here for financial intermediation, making sure that finances flow to all sectors and making sure that those finances have impact that are measurable. Thank you very much, Clem.
Thanks a lot. And last but by no means the least, we have Mr. Kieran Smith from Mr. Green Africa.
Hello, everybody. Good to be here. My name is Kieran. I'm co-founder and CEO for Mr. Green Africa. And thank you, Ellen, for already introducing Mr. Green. Sorry for the background noise. I'm not sure what that is. But let me share just quickly what Mr. Green is built on. And we were built on two principles. A, can we build an inclusive, fair, ethical way of how we source the plastic waste back into our value chain, into a more formal value chain, similar that you see in fair trade value chains in agricultural businesses where smallholder farmers are included. Our smallholder farmers are waste pickers who harvest every day. And the second principle is really built about local value addition, creating highest possible value within the country of origin, unlike many other commodities that we see out there where the value happens outside of the country of origin. And so great to be here. Thank you for having me.
Yeah, thank you very much, Kieran. And I think that's a good segue to the first question, which I'd like to direct to you as the man of the moment. What's been your fundraising journey like, with Mr. Green Africa? I mean, starting small and trying to get funding for the kind of sector you are in. What has your experience been like over the years?
Yeah, sure. I want to start with, and when I get this question, I want to start always with, when we started Mr. Green Africa, it was at a time when circular economy, the term, I'm not sure, probably existed, but it was not even, I didn't even know it at that time. And the need and the awareness around plastic pollution, the need for plastic recycling was also not as evident and as big as it is today, right? So when we started on the journey with these two principles, it was pretty much an entrepreneurial journey. And I like to, always compare an entrepreneur is somebody who jumps off a cliff and is trying to build a plane on the way down, making sure it gets to fly before you hit the ground, right? And I would say this is also a reflection of the fundraising journey, because ultimately it is about convincing like-minded people, organization to believe in your vision of something that is not as tangible as it may seem to you as an individual or as a group of people, right? So I would say that the overall journey, we as Mr. Green Africa, we've been extremely blessed to find such organizations and people who believe into the journey. And I'll speak to it later as well, but it was a very traditional way of fundraising, family and friends, or let's start with putting our own money first, because nobody was willing to invest into an adventure, which it was at that point. But then with a little bit more traction and being on the ground, being able to bring family and friends on board, and ultimately going with institutional investors in the Series A, Series B, with organizations like GIF, DOB, DAO, Minderu. And so, that the ultimate core of how the journey has been, it's been great, but it's also been humbling, There were times when, we were about to run out of money and we weren't sure how we're going to pay for the salaries and so on. So you see, so it's a fine balance between creating the traction with the money, with the resources that you have, and prove the case and prove the data points that suggest that you're onto something big, something relevant, while making sure you don't run out of money, right? And constantly going through those financing rounds to be able to attract the right capital, but also more importantly, the right partners that join you on this journey. So I would say that's it in a nutshell.
Yeah, thanks very much, Kieran. And I really think that experience would resonate with a lot of entrepreneurs in Africa, not just in the circular economy space, but across sectors. And we'll come back to that. I think there's a lot to unpack in what you've said. But before then, we would like to go to Lily. Lily, what role does the Global Innovation Fund play in helping to scale innovation models for development, broadly speaking? But again, what has been your experience in the plastic circularity space in recent years? Of course, including with Mr. Green Africa.
Thanks, Clem. I guess just to take a step back, GIF's role, we're very much rooted in development economics and evidence and really understanding the impact that an innovation has on our target market. So those living under $5 a day. And in terms of kind of the role we play, we'll look to find innovations such as Mr. Green and take a risk on them. And really work with the company to kind of pilot and test and then hopefully scale those innovations so that they reach as many people as possible and increase the depth of impact on those individuals as well. So we do actually take a sector agnostic approach to our investing. So we've invested across agriculture and health, mobility, education, waste management. And actually, so Mr. Green is the only plastics investment that we have. And similar to Kieran's point, plastics, when we first made the investment, it really wasn't the priority for us. It really was the waste picker model that they built the whole company on. So for us, just continuing the example that Kieran gave on farmers and agriculture, there are tons of innovations out there that target farmers. There are not very many, if any at all, I think, back when we made the investment, that really target waste pickers. So for us, that was really the first aspect of the model that piqued our interest. And then really it was the team. Kieran has and Kareem's co-founder have built an incredible team, really where entrepreneurial spirit, as Kieran said, goes down to every single part of the business. So that's our experience so far. It's definitely still a journey. But I think the unique aspect of Mr. Green is that the model kind of touches every single kind of intervention of the plastics supply chain, from collecting and sorting, recycling, sales, advocacy and policy. So there's a lot going on. So when it comes to plastics, I feel as though we're in the deep end in every aspect of it.
Thank you very much. If we move on to UBA, Chidozie, I mean, UBA is becoming a very strong regional bank. I believe that it has footprints now in almost half of the continent in terms of number of countries where you operate. And so I believe that a number of our listeners on the continent, would identify with the brand and what you do. But specifically for now, we just want to understand, how does UBA evaluate financing and investment opportunities, particularly in the circular economy space? I know that a lot of people will be looking to hear what you do and perhaps what opportunities are available for them to key in.
Okay, thank you very much, Len. So there's a massive opportunity in that space, and the way we like to think about it is to look at the two sides of the play. So the upstream and the downstream side, and look at the risk and how the businesses can be de-risked. And like Karen has said, it is not always very easy to give monies or to finance startups or new businesses because of the uniqueness of the risk inherent in that. So basically what we do in that space is to develop a risk acceptance criteria that we then use to guide those in that space to know what to do, like basic bookkeeping. Remember, it's a commercial bank, so unlike Lily, we don't take equity stake in these businesses. So we try to ensure that every aspect of the value chain is properly de-risked, and the de-risking would typically include knowing who the off-taker is, if you're collecting, who is going to buy it, the entire cash flow, and like I said, the bookkeeping part, the governance structure of the business, so that we know that this is a bankable venture or that the initiative is actually something that is being promoted by people who are truly here to make impact for all stakeholders. So that is how we take a look at it from that side. But again, it is easier, unfortunately or fortunately, to deal with the bigger names, maybe the upstream players. So like the bottling companies and the major organizations, because they have proven records. You can see from their different activities where the money will come from. So we basically focus on both the return of the money and the return on the money. So those have diverse sources of income that you can always look at. So basically what we try to do is look at the full value chain, look at the risk inherent at every stage of that value chain, look at ways of engaging with the customers or the clients to try to de-risk each of the risk at every stage, and then or play around the kind of financing that will suit, or the kind of loan or bonds and guarantee that will suit what they are doing. And as you would relate to, in this part of the world, there's this foreign currency risk, and we have learned a lot from the Sunray Fund that Ellen mentioned. We are one of the banks that had that fund, and there's a massive experience and learning that came from there. So there was this money, but we couldn't find the businesses to take the money, So we're practically begging people to come and take money, But the problem is when people come, you do the risk assessment, because the 100% of the credit risk, 100% of the credit risk resides with the bank. So the French Development Bank only gave the grant. Then there was the technical assistance there, but the credit risk was supposed to be, assessed by the bank. So that means that we had to, set criteria that will ensure that the fund is properly guaranteed or secured. But that again shows the need for innovation in that space. We can't use the regular mindset to do that business, and that is a major thing that we learned. Innovation is required. Yeah, so that is the kind of thinking that we bring to the plastic space to say, thank you, Clem.
No, please go.
Okay, so that's the kind of thinking we are bringing to the plastic space to say, okay, we have seen how Sunref worked or did not work. So when we are looking at financing players in this space, there are certain things that we need to tweak to accommodate what they are doing, because there are really no very structured markets in Africa for that. You just have pockets of individuals doing things. There are no very strong or clear legislation that supports them. I don't think, at least in Nigeria, that there's any tax incentive yet for those in that space. I'm not aware of any, maybe there are. But the idea is that if there could be, I just think, just to keep it simple, innovation is really required in that space to really finance the space. Thank you, Clem.
Yeah. Thanks a lot. This is an eye-opener, but at the same time, too, it sounds very unfortunate that funding was available, but no one was, available to access it. And I think that is a general problem that we have in many markets across the continent. But then I'd like to, before I move on to the next speaker, I'd just like to dig deep a little bit on what you've just said. And my question would be, so what is UBA and, of course, other lenders in your category, particularly in the retail and commercial banking segment, what are you doing to ensure that there is sufficient knowledge, within the markets, for people in terms of what is a typical bank looking for in order to finance or to fund an initiative? So like the kind of tools you talked about or the criteria you talked about, is there some knowledge around it? Is there a place where people can check these things up and say, okay, if I'm going to apply for a financing facility, I would need to do X, Y, Z in order to prepare myself before I even approach the bank. Is there anything being done in that area?
All right, thank you, Clem. So there's something we call the SME clinic. So, and I'm sure a lot of financial institutions are doing that. So the idea is to help SMEs, particularly SMEs or organizations that really do not have very complex structures or advanced or matured structure, to understand what the minimum criteria will be if you want to access certain type of fund, and the types of funds that are available, loans, bank guarantees, bonds, depending on the business you're doing, and how to also hedge FX risk. So if, for instance, if you want to take an FCY, foreign currency loan, it is expected that you have foreign currency receivables. So you cannot be doing domestic sales only, and you want to collect a foreign currency loan. There will be a mismatch. And if you're into business, you should understand the bookkeeping. That bookkeeping is very, very important. Just try your best to record what you sold, when you sold it. Have a bank statement somewhere so that someone can relate to your business and say, oh, he has a history of banking here. Then from there, it is easier to accommodate you into the circle and begin to grow with you on your journey. But so we have that advocacy out there, and there are technical partners that are experts in the industry where you play. So we try to organize seminars for those experts or those, and bring those experts to the seminar to train you on the risk inherent, because the off-taker, what you are selling, someone needs it somewhere. So if you don't know who needs it, then it may be very difficult for you to even know who to sell to. And we have e-commerce business, e-commerce platforms, what we call, basically e-commerce platform where we connect different stakeholders. So if you join that, you stand a very big chance of meeting potential partners that could help you add more value to what you do. So we are doing that, and I'm sure so many other organizations or banks are also doing that, because we really, really, really need people to understand the business they do, how they do it, so that we are here to give the money, you know. So we need people to really know what to do to collect the money.
Absolutely. I mean, like we say, knowledge is power. And I think it's important, you know, that we find platforms to disseminate this kind of knowledge. But more importantly, also maybe some kind of portal or website, you know, where people can check out, you know, their qualification before and know how to prepare themselves. But thank you very much for that insight, Chidozie. And so we go to Haley. And Haley, I think, you know, what Chidozie has just said, perhaps, you know, will be very relevant, you know, for DAO, because of the kind of organizations that you support. I think most of them are in the SME space in terms of the people you then support to within the sector. So the question for you would be that, as a material science company in the plastics, you know, value chain, DAO is of course very well known, and you know, you've approached the plastic pollution challenge from many different angles. Can you please speak to us about why and how DAO has invested in Mr. Green Africa, and whether there are similar organizations also that, you know, you've invested on the continent?
Yeah, thank you so much. So just for those who don't know DAO that well, so as I mentioned before, we're a large material science company that makes plastics and adhesive materials for many different applications, things that keep your food fresh, that deliver clean drinking water to people who don't live near a clean source, that deliver clean energy to the grids through wire and cable applications, through automobiles. So really a lot of different applications. And we have a long history in sustainability. So last year we launched a sustainability target to transform the waste and to commercialize 3 million tons of circular renewable solutions. And this is a big percentage of our business, but that means we need 5 to 6 million tons of waste, of plastic waste. So being able to unlock this waste and build that back into the circular ecosystem that Lily mentioned is critically important. So that's everything from collection, sortation, processing, recycling, and end markets. So think about both supply and demand. And you actually have to go create this ecosystem in many geographies like Africa, where some of the systems don't exist yet. So the way that Dow has looked at this is several years ago, we started an impact fund, a business impact fund, where we have our Dow Foundation who allocates money. We've allocated about $5 million to 25 projects over the last several years that have a social, environmental, and a business impact. And that helps us start financing a project at the beginning stages of the investment to de-risk it, to start a pilot. And once we move past that, we see success in the business model, and we're able to move quickly with larger check sizes through our venture capital arm. And that's what we've done with Mr. Green Africa. Early in 2022, we started an investment with the partnership. It started out actually as an impact fund project and then moved to our venture capital investment, where we applied an investment to help Mr. Green Africa with their expansion. We want this material and the post-consumer cycle back so that we can put that out into the marketplace. And we also want to see plastic pollution reduced. And we believe that there's a way to do that in a socially responsible way. So why are we doing this? First of all, many African markets are still highly reliable on flexible packaging to actually as resources to allow safe drinking water, as I mentioned, to the population. And operating models that work well in Africa don't necessarily work, operating models that work well in Europe don't necessarily work well in Africa. And so we have to focus on the E and the environmental side of getting that waste back out of the environment and targeting that through the wastepreneurs or the waste pickers that Kieran often works with. The social side of making sure that the waste pickers and the value of the plastic waste to influence behavior change and keep it out of the environment, and ensuring higher wages and stable income and fair trade sourcing models are done from the social side. And from a business side, we're looking to convert that plastic back into recycled content, which many countries around the world are asking for more recycled content. So several brands, I would say over 400 brands, have made commitments to use recycled content embedded into their packaging applications. And so we need to unlock that demand of getting that material back so that we can put that more in the circular economy. And so our investment is going to enable 90 KT of plastic waste to be recovered and recycled back into packaging applications. And really the bottom line is that Dow and Mr. Green really aim to co-develop a traceable, fair, high quality post-consumer recycled material that can be used back into the production of flexible packaging, allowing the brand owners and other plastic manufacturers to meet their sustainability goals in Africa. So it's a really, really exciting story, Clem.
Thank you very much, Haley. Very insightful, and I think that a lot of people on the audience, would be making notes and knowing how to connect after this. So we have just about 15 more minutes for the panel discussion, and we'll take another round of questions before we close out on this segment. And I come back to you, Kieran, and would like to know what types of sources of capital, you've found to be more appropriate at the different stages of your growth. I think that there are different, kinds of capitals that are available, but it's also important to understand, for a specific stage of growth, what would you consider to be, the more appropriate type or sources of capital that you've encountered?
Yeah, sure. So happy to, and a pleasure to give insights there. So I would, grade it into sort of 2, 3, maybe 4 categories, right? And from these 4 categories, we've probably been able to go through 3 stages of that. And the 4 categories, obviously, sort of the early stages, the figuring out stage, pretty much an adventure stage where you don't know a lot of things, you just know what you want to achieve, and you need to seek data points and your purpose of being, your position in a value chain. Now, considering a plastic value chain, where can you add value, right? And that takes a lot of time, that takes a lot of resources. And I would say this is the best type of money is family, friends, your own money, pre-seed money, maybe even some angel money that allows you to go through this process to figure these things, these important elements out of that contribute to your business model or your business idea. And sometimes you start with a model and you have to pivot, you have to change it, you have many iterations until you really can crack that quote unquote code. And then once you get to the stage of having said, now I think we are onto something. We can already see traction in the market. In our case, it was traction with the waste pickers, that our value proposition actually really works and is holding true and builds the traction and attracts more waste pickers. And on the other side, finding customers, right? People like the brand owners that Haley has mentioned are willing to sign up and actually include the material into their packaging, which is a long journey in the plastic space, right? When we talk about quality, quantity, consistency, and that's not an easy feat to do. And so product market fit stage is really a stage that I would categorize as where you're fit for seed funding or Series A funding that really allows you, depending on the capital that you require, that allows you to showcase that on a more professional and relevant size, not at scale, but at size. And to go through the learnings that you need to do in order to run a business at a bigger size, right? More employees, processes, and professionalizing these processes. And then the third stage, I would say, is about now scale up, ramp up. How do you now go from what you've built on a foundational level to a much more massive scale? And that comes with more governance, more people, more robust processes, adjusted processes. And I think that's really the stage where a series B with institutional investors make the most sense, because you can't go on this journey on your own, especially if you're a first-time entrepreneur. There's many decisions to be had and to be made. And there, in some cases, there are some decisions that you can avoid a lot of mistakes just by experience, by the people that you bring onto your journey. And I think if you bring experienced investors who have seen entrepreneurial journeys before, have the foresight of what can go wrong, and have the patience of you going through the learning process, I think that's where this Series B money is really good, because you can get relevant money that allows you to have a longer runway, that allows you to invest and make critical investments and so on. And then the fourth stage, which we hope to get into very soon, is the stage of scale and replication, right? A system, a blueprint that you can bring into hopefully other markets, other regions, right? And that type of money again is could be, of course, a Series C, but it could, the type of capital, is maybe private equity or more strategic partnerships, type of money that people who are willing to write bigger checks and really take a long-term view with you on this journey, right? Because also replicating a model only because you've proven it in Kenya or in whatever market doesn't mean you can do it in another market as well, right? So taking that risk and doing the reiteration and taking the time to be able to adjust your model and contextualize it into this new region takes time and takes a certain risk capital, if you will, as well. Yeah. So those are the four stages: figuring out stage, product market fit stage, scale up, professionalization stage, into then replicating stage.
Wow. Thank you, Kieran. This is like a masterclass.
Thank you.
Okay, so we go back to Lily, and Lily, I mean, we have UBA, which is a retail bank, and we have GIF, which is more like an impact investor. It would be good to know how you see the future investment opportunity landscape for plastic circularity, particularly from an impact and development funding perspective. And also to let us know if there are other investors joining the Global Innovation Fund on this path that you already are.
Thanks, Clem. I wish I had a crystal ball to give you that answer. But I think with Mr. Green, kind of their Series B and that consortium of investors that joined, that's a real testament to kind of actually the credibility of plastic circular economy kind of models. And I think investor interest is definitely growing. mainly for the reasons that Haley mentioned, where plastics recycling has really gone from more of a CSR consideration to more of a real corporate core priority for a lot of these larger institutions such as Dow and Unilever and others as well. And it's those moments that investors start to get interested. But if we look at the larger kind of macro funding environment for waste management, since 2019, about $15 billion has been invested across the African continent, and 2/3 of that has unsurprisingly gone to fintech and energy, and less than 1%, about $100 million, has gone to waste management. So it's still a very nascent sector for a lot of investors, and for the type of capital that is available more broadly, it's still largely kind of in the grant stage, which actually I think is a really good thing. Grant capital plays a very important role in the broader kind of investment ecosystem to really de-risk those for-profit models. For instance, the government of Canada was very active in this space. I think they invested or provided grant funding to about 20 startups last year. So I think my expectation, optimistically, is really over the next 12 to 18 months, I'd expect to see some really interesting plastic startups kind of graduating from that grant capital in need of risk capital, so kind of that seed stage that Kieran was talking about. And hopefully that will also coincide with some very interesting developments at Mr. Green. And it's signals like that investors look for, and that's where you really start seeing kind of private capital being crowded into a specific sector. And just kind of one more thought, which is really exciting for me at Africa Climate Week a couple of months ago. There really was an abundance of very early stage startups in the plastics recycling space by incredible young women and men. So I'm, like I said, very optimistic about kind of the future of this space. And it's still got a way to go in the kind of investment ecosystem across the continent, but definitely a space to watch.
Thank you very much. And I think we'll be looking forward to that opportunity. There are 1,001, entrepreneurs looking to be able to link onto those. So thanks for the work you do. Chidozie, would come back to you on some of the things that you had said earlier, but I think one thing that we wanted to be sure about, I mean, you talked about some of these fundings, that were available. And the question, I think also, in some of the contributions from the audience has been around how easy is it to get access, to this funding in the first place in terms of meeting the criteria that you said, but also what kind of interest, rates are people expected to pay to be able to afford, the kind of financing that you bring to the table. So I hope I'm not taking you off guard, but is it something that you would like to comment on at this stage?
Okay, thank you, Clem. It is not unusual at all to hear the interest rate question. So, but the point is that interest rate is a function of the market where the fund is being sourced and where the fund is being disbursed, and also the maturity level and the governance of the business seeking the loan. So there are so many considerations that determine interest rate. It is not usually a fixed rate. And I say this because there are instances where there are loans at 9%, there are loans at 30%. So it depends on the risk level that your business carry. And that risk level is easily defined by, one, the corporate governance that you have in your business, two, the level of disclosure or transparency that you can actually present when you're coming to a commercial bank to get a loan. So we want to know the promoters, what is their capacity, what is their experience, the market, how deep is the market, your product, what is the quality of the product, your off-takers, what are the guarantees you have, what kind of insurance do you have? So there are so many things that when you mention and you're able to display, then it gives more assurance. It gives more confidence to the lender that, okay, this business is not risky. You can lend clean. Commercial banks can actually lend clean, meaning lending without any collateral. But that requires you demonstrating a certain level of corporate governance and deep experience in what you do and the market. Like I said, it's all about return of the money and return on the money. You know, so once you are able to demonstrate that this money will be returned, then it is easy to continue that journey with you.
Yeah,
So,
if I can just come in very briefly, and I know that, you had talked about two strands of, financing that's available. One, of course, the ones that come directly from the bank, and then the ones that come from development, partners, for impact lending. So in terms of interest rate, obviously, we know that the commercial lending, that is the bank's own money, certainly would be a lot more expensive, really. I mean, similar to what we have in the market. But for the ones that come from development partners, for those who want to access those kind of money, like the one or the Sunref one that you said you had to return, what kind of interest rate could one be expecting for that?
Okay, so like I said, it is usually not a fixed interest rate. So I'm trying not to mention a figure that you will go to the bank with, So, but I'm telling you that there is a range. It could be single digit, it could be double digit. But the point is that the most important thing is the riskiness of your business. Once you are able to demonstrate that the risk level is very low and acceptable, then you will get the best pricing you can ever imagine to get. Like the Sunref you've mentioned, I mean, the money was available up to 9% in some instances, 15% in some instances, but for some people, it could be as high as 25%, so that's just the idea. It depends on how well you have, de-risk what you do.
Okay.
And that is what really gives you your best price.
Yeah, thank you very much. I mean, this is a hot topic, and I'm sure it's something of substantial interest to the audience. Perhaps there'll be another platform where we can talk about this in greater detail. But in the interest of time, we will move on, and then I think the last question would be for the panel discussion would be for Haley. And Haley, we would like to understand, what extent Dow sees more opportunities like Mr. Green in this region or elsewhere. I mean, given what you know of the region and what you've seen so far, how many more Mr. Greens should we expect to see in the coming few years?
Yeah, so I have an opportunity to be able to see a lot of these innovators and entrepreneurs start up around the world, and I am continuously amazed by the opportunities that I see in Africa. I always get really frustrated. I love the continent, and I always get frustrated when people say, oh, this is Africa. Africa is made up of so many different countries, and what works in East might not work in West. And so I think we need to be really honest of there are different business models that need to work for the local context. Waste is local, plastic waste is local. And so how do you design a business model that ultimately works for that space? 3 examples that I see that exist right now are in West Africa. We've been working on a project that targets flexible plastics and packaging such as water sachets. And we're able to take those water sachets and convert that back into a material that can be used back into applications. In South Africa, there's an organization called CRDC, and they really have breakthrough technology when it comes to concrete modifier. They're using plastic waste to mix in with concrete modifier to create a material called resin 8. And that not only helps the country get rid of plastic waste, but also builds communities and infrastructures. And then one example that I have seen work really well, but in another geography that I think could be similar to a model of Mr. Green growing and the growth that we see with MGA is, we've made an investment in Circular Capital. And part of the reason for doing that is Circular Capital helps us identify the gaps in the ecosystem that are ultimately broken, fuels parts of the investment into those gaps, and then it helps us unlock supply. And so through a partnership that we had in India, actually with Lucro, we're able to get plastic waste and convert that back into many applications for secondary packaging, such as bottles and caps. And that allows the companies to meet the government's requirements of having 20% of that product be made from recycled materials. So the last thing that I'll mention is just like a quick shout out, because in a few weeks, there's a big event that's coming to Nairobi in Kenya, which is the UN Plastic Pollution Treaty that's going to be negotiated for INC3. And in this draft third round of negotiations, policy plays such a critical role to getting plastic waste out of the environment and being able to build that back into the system. And financing schemes like EPR mechanisms are really critical. And EPR, for those who may not know, is called Extended Producer Responsibility. And this is an investment mechanism that actually allows funds to be collected and earmarked towards collection, sortation, and recycling schemes. Parts of what makes an EPR successful is when it involves the business policy oversight and can actually be sector specific. And so, and when relevant, these EPR policies should really include the informal sector as well in the design. So a lot of stuff coming out of Africa over the next several weeks. And so we're really excited about the opportunity that we see, not just for the continent as a whole, but for many of the regions and countries specifically.
Thank you very much, Haley. And that's quite an optimistic mindset. And I think that's what we need, to solve this problem. Before we round up on the panel discussion, I think it would be great to take a look at the questions box and see what our audiences, have to ask. And a number of the questions are cross-cutting, so I'll see if I can bunch a couple of them together in the interest of time. There is a question that asks around the INC. It talks about the fact that whether we need, plastic pollution fees of some sort, like some governments groups are proposing, groups like the Mindoro group want the treaty to have, plastic pollution fees. And the question is whether we see those sorts of government funding mechanisms to go with this private funding being discussed here. I mean, do we think that that is something to do? Of course, in that space as well, we can put in the EPR and what would be our points of view on this. I think it would be great to have, Lily's point of view on this, and Kieran, if you may, perhaps in just 1 minute, if you can share your thoughts.
Thanks, Clem. I think from my perspective, there's still so much uncertainty as to what will work and what doesn't work. I mean, this was actually something that Kieran was educating me on yesterday. So I feel like he is far better placed to answer this than me, because something else we were talking about was plastic credits as well, and how the two seem to be either or. I think our priority would be like, how do these kind of additional mechanisms really feed through the system to those at the bottom of the pyramid of the plastics ecosystem, and they don't just end up in the pockets of shareholders or other kind of government institutions, where they really need to be making their way to the people who are really doing the hard work. But Kieran, I think you have more insights than me on that.
Yeah, sure. And maybe also for context, we've been waiting for a long time in Kenya also to get a mandatory EPR scheme, that is trying to facilitate the investment, as Haley has mentioned, the investment into collection, sorting, and recycling infrastructure, and really trying to balance less recyclable plastic or more difficult to recycle plastic that are more expensive to collect, and help also mop them out of the environment. So I think it's a great mechanism that can work in many African nations and global South nations, if you will. The higher level would be the deposit scheme, which is much more cost intensive and complex to manage and run. So we're definitely also an advocate of EPR schemes, and we wouldn't be an advocate of trying to create a tax incentive of trying to charge, for example, for imported virgin material, because it obviously the repurposing of these funds, how can we ensure that they're going into being invested into the infrastructure that we need for the recycling space, and a dedicated EPR that is fenced off can really ensure that, right? And is more effective and quicker to make the necessary decisions, and also is much more flexible, if you will, of adjusting the price points, right? Because you cannot change the taxes all the time, right? The percentage of the tax to adjust for these volatilities that exist in the markets as well. So we believe as well that EPRs are much more better placed, and actually incentives within the EPR schemes are much better placed. Like producers who increase their recycled content and design for recyclability, they need to pay less in the EPR fee scheme than producers who do none of the two or one of the two, right? And I think this is where, when we have the stick and the carrot, right? A carrot is probably much more effective in this space, and it incentivizes the pioneers, the first movers, the people who really want to act on it, and basically reduce their exposure or fees that they need to pay. And I think I will close with that. It is important when it comes to scale up and infrastructure building in many markets that we have here on the continent. It's super important that we have the flexibility, we have the ability to adjust, and we have the ability to leapfrog. So utilize these funds to leapfrog into a circular system rather than trying to transition away from a linear system as we see it in European countries, right? And that's where I see these type of mechanisms with the carrot, quote unquote, can really be effective.
Thanks, Lily and Kieran. Very well said. I think a number of the questions actually, relates to UBA. So there's a lot of interest in the money. And I think a number of those questions have already been answered in the comments by Chidozie earlier. So we would not be repeating those. But I think there are two questions that I consider very important that we should touch on. About two of them are talking on very innovative areas, asking whether there is a possibility of creating cryptocurrencies for the plastic waste sector, and also whether it is possible to create some kind of, credit system, using plastic waste. I think these are very, I should say, out of the box thinking. So it would be great to see whether there is anyone on the panel or, some people on the panel who would like to just briefly talk about this or share their thoughts. Okay, if not, I think this is something that we need to give more thoughts to, and hopefully in another platform we should be able to talk about that. There's
I'm happy to just maybe address a few things, because I think all creative and innovative ideas are needed in this space. Like, we clearly have a global challenge and an opportunity to be able to get more plastic waste out of the environment. And so I think any creative option or solution needs to be brought to the table for sure. But we just need to make sure that whatever that is, we are solving the problem, and we are actually building out the gaps that we see in this value chain, which gaps in infrastructure, gaps in the ability to scale. The companies are all saying that there's a supply concern, which sounds crazy in a way that, there's waste in many different places, but how do we get access to it and unlock it and be able to clean it up? Because there's plenty of demand. So I think as long as whatever mechanisms that we put in place can solve those issues and actually help unlock that supply, I think is a really important driver.
Thank you very much. That's very helpful. And I think there is a comment also in the questions box, I think referring to the issue of cryptocurrency, I believe. This is from Sebastian Apram, and he says, I have a work in progress innovation on blockchain tokens. Sebastian, if you can put your contact on the chat box so that those who are interested in this area can connect with you and explore the discussion, that would be great. The last question that we would take, I think, let me see, Haley, you may be able to comment on this, because I think it's a build up on what you had said earlier. And the question is asking whether there is a better way of or model that could be leveraged for light plastic laminates of wrappers for biscuits, sweets, candies, noodles, etc. to be managed. I'm not sure if you would like to address this further, but perhaps to bring clarity on something you said around this earlier on.
Yeah, sure. So I just a few things to level set people. First of all, I don't know that many people know this, but flexible packaging often has a lower carbon footprint than any other materials. But the recyclability rates of that material are much lower as well. So you want to still be able to balance those equations of keeping the carbon footprint low and the material choices that you make and being able to increase the circularity that we're working on. And so a lot of that, first of all, starts with design. You need to be able to design the material in a way that actually makes it recyclable in the first place, technically recyclable in the first place. And this is something that Dow and many of our customers work on all the time, with ensuring you're at the design table at the beginning and you're designing the products in a way that when they go through the circular chain, they're really fit for being able to fit back into that circular chain again. So that's one of the things that's addressed. But this is something, honestly, that we're working on with Mr. Green Africa as well. We believe in a place where all plastics have value, and we want to see that built back into the circular ecosystem. And so there are mechanisms and ways that we can collect, sort, process, and use different technologies to be able to build that back in. One of those technologies is a technology that actually the industry has invested over $17 billion globally in, that's called advanced recycling or chemical recycling, that can take harder to recycle plastics and actually put that back into, melt that down to a liquid or a gas that is put back into an input. Instead of using more oil and gas, you're able to use that trash as a feedstock to build all the way through. And so there's a lot of innovation happening in this space, but really it starts with design. It's built through the collection mechanisms and then finalized through technology processing. And a lot of these things, Mr. Green, Africa, and Kieran and the team are even expanding some of their facilities to ensure that this material is built into that system, which is really cool.
Thank you very much, Haley, and I think that's a good comment to close out, the panel discussion in the interest of time. So thank you, Kieran. Thank you, Lily. Thank you, Chidozie and Haley. It's been a very exciting period chatting with you on these issues, and thanks for the very valuable insights that you've shared. So we'll have to move on quickly now to the last segment of this session, which is the wrap-up, and it's my pleasure to call on Mr. Chris White, who is the founding director for Africa's Circular Economy Network, to please, help us sum up the discussions today. Chris?
Thank you, Clem, and thank you very much to all of those contributing, as well as there's some really great questions there that I was hoping we'd get some answers to, but we've run out of time. I think really what we're seeing from this perspective is a number of different issues. One is that we're not seeing enough investment into the sector. We look at the fact that Global Innovation Fund has got one project, and we're hoping that's gonna increase. But there's a lot of things I wanted to pick up in terms of the funding side of things. So for your interest, I'm a director of the African Circular Economy Network, as well as a founding director of the ASIN Foundation. We've been talking a lot about the ground up stuff here, but there's also top down that's required. So some of the stuff the foundation has been working on, for example, currently with the African Union Commission, is working at the government sector level to look at a continental circular economy action plan, trying to get that capacity, knowledge, and understanding in at the top level. That's critical also for us to understand how we start to look at the development of creating the governance structures, the frameworks, the knowledge, the systems that will create those enabling environments. What's come out of this very clearly from us is, and again, I think anybody who's in this space, anyone who's been the entrepreneur who has jumped off the cliff, like Kieran, I don't know how he's managed to jump off a cliff and still look so young and handsome. Maybe I jumped off the wrong cliff. But the opportunity really is just understanding the value proposition. Now, if you look at a Mr. Green Africa or a CRDC or some of the other ones that were mentioned, you need to understand the complexity of the value add and the value proposition that has been applied. there are many, many people, and I get approached by them constantly looking for money. And honestly, if you're not looking at a well-structured business plan that looks at all those key issues, you're not going to attract a bank. So we are still very limited to grant funding, to startup funding. However, as was mentioned, the banks have money, and it's not just what is it? My Africa Investment Bank. Sorry, from Chidozie's perspective, there is money. They want to spend money on this, but there is still a risk issue. We need to understand that in terms of trying to drive this development, we've got to look at the opportunity in terms of understanding all those risk issues. And a bank is going to always be the same. It doesn't matter which way you look at it. And most of your finances, your equity finances, are going to be looking at exactly the same thing. So the more that you do, like Mr. Green has done in terms of understanding your value chain, your partnerships, your linkages into the system, those are vitally important. And Haley mentioned that, we look at yes, we are wanting to address the social, the environmental, and the financial components. And there are opportunities to look at de-risking. And I think that's critically the opportunity where if we can look at project opportunities in the plastics value chain, where we understand the complexities of the different components in that value chain and address those, it becomes more fundable. But banks are still going to be banks. So that also requires partnerships, and that's critically important. There's no entrepreneur who can do everything. Your partnerships are vitally important, and one needs to ensure that you work with the likes of the Dows, the Unilevers, because there are opportunities that they need to meet their obligations, and it's aligning your business model with that. So there's a lot of opportunity in that. Design, Haley, absolutely important. We need to look at that, and we're hoping, and we are going to hold the industry responsible to that. But in the meantime, we have a legacy of plastic we need to deal with in and across the globe. And innovation technology is certainly bringing opportunities around that. But we need to look at it from the perspective of saying, how do we start to move away from grant funding, incubator funding, accelerator funding, start looking at where the banks can play a more significant role. De-risking, I think, is the key component. So working with the industry partnerships where we can look at their interest from a corporate social responsibility perspective, from an EPR perspective that ties into your business model, that allows you to look at the value add and the value proposition going forward. It's not a simple place to be. We're in a very different environment, particularly in Africa, where EPR needs to target the people at the base of the pyramid. And as long as we can try and support that initiative, we will create enough feedstock that will provide a supply and a demand that will create opportunity for investment in the infrastructure higher up the value chain. So from my perspective, yeah, we're all looking forward to what's going to happen next week in Nairobi. And I think we're looking very, very clearly at that, as well as understanding sort of post COP26 and pre-COP28, understanding how we're looking at the alignment financially from international financial regulatory standards to the International Sustainability Standards Board, and linking that into the corporates now who are more aligned with environmental, social, and governance reporting. It's going to drive finance into the sector, but you need to have all your ducks in a row. It's as simple as that. Mr. Green is a great example of that, and he's got all of those different questions that a bank might ask answered, or somewhat answered, Kieran. But it really is just that we need to ensure that in order to advance the opportunity around the plastic cycle, that we look at all these key components and we bring those together. And that's where we need to work together. We need to help each other. And there's a lot of great people in this room who will help you get there. But we need to create those partnerships and strive towards a common goal. Thank you.
Thank you very much, Chris. And that's a very articulate, summary of today's discussion. And as we wrap up the webinar, we just want to express our gratitude to all our distinguished speakers, participants, and the partners who have been involved in this program for their valuable contributions. The discussions and ideas that have been shared today highlight the incredible potential for supporting Africa in transitioning to a circular plastics economy through enabling financing and investment in the sector. But I think that beyond financing, in the sector, we also need to talk about market development. And one of the great ways of doing that is ensuring that, at national levels, we are creating the regulations that can drive the use of recycled plastics. And I think one of the great work that is being done to ensure that this happens is the work that the Africa Circular Economy Alliance, ASEAN, is leading on the continent, together with the Africa Regional Standards Organization and a number of other organizations that are supporting the work, to ensure that we can have a single common standard for food-grade rPET on the continent. I think if we're able to do that and then back it up with regulations that can encourage the use of recycled plastics, that is perhaps, one great way to open up the market, and of course, to ensure that we can boost collection and recycling on the continent. But that's a lot of work that is still ongoing, and you may please get in touch with those organizations if you're interested in supporting that. And for more information on the discussion topic of today, you can please check out the report that was presented by Ms. Ellen Martins on this webinar. There is a link in the chat box to the report, I believe. And also, please stay tuned for the upcoming annual report of the Global Plastic Action Partnership. It's been a very insightful discussion. Thank you so very much for all your attention, and thank you for the contributions in terms of the comments and the questions. And I'd like to say at this stage, this is the end of the conversation for this particular session, but we're sure that this is going to continue over and over again. So thank you all, and goodbye for today. Thanks.